Today, we're going to talk about professional practices, as I refer to a 1.0. If you look at your Ethics and Professional Practice manual, you'll notice the last chapter, chapter 4, I believe it is a rather long chapter. You know, that particular chapter really has to do with you. You as the advisor, you as the representative, conducting your business in front of your clients. How should you be acting on behalf of your clients, and so on and so forth, okay? So that last chapter is actually critically important, so I very much suggest that you spend some time reading it very carefully on that, because really that last chapter basically deals with you as how you should be conducting yourself in an ethical manner with your clients. And so we're going to break this particular session into two sessions. So the Professional Practice 1.0, and there will be another one then, Professional Practice 2.0, basically. So let's take a look first at the first three. The duty of care. That's the very first thing that comes up when we talk about professional practice is duty of care. What's the definition of duty of care? The definition basically is really quite simple. What would a reasonable person do under those circumstances? In other words, the duty of care basically measures your conduct based on what a normal, everyday, reasonable individual would have done in that particular situation. You have a duty of care to your clients, for example, to put their interest first, not your interest first. So you have automatically a duty of care. In other words, you were responsible for this. You're responsible to make sure, for example, that your client is safe, or somebody walking into your office, or you walking into their home, that the home is safe. So in other words, it automatically would assume that a reasonable person would have an environment where it is in fact safe. And the same thing follows with basically in our industry, in that what would a reasonable person provide for that particular client. So duty of care is very important. The next one is what we call integrity. And that really goes without saying. It's all about honesty. You know, it's about being forthright. It's about, once again, making sure that your client is well taken care of. If you say you're going to do something, do it. If you can't do it, at the very least, notify your client saying, Mr. Jones, I'm very sorry, but due to circumstances, I won't be able to do whatever it is. But maintaining your integrity is probably one of the most key elements for the future of your career, okay? If you screw up your integrity, you're going to screw up your career as well, you know. So it's very important that you be honest, you be fair, forthright, making sure that your client is always in the forefront of your activities. And the last one is competence. When we talk about competence, we're really talking about education. In other words, here what we're saying is the client can reasonably expect that since you are sitting there with them and conducting your business and everything else, that you are competent in that particular area. It's no different than if you go to a doctor or surgeon or whatever it is. You expect that doctor to know what they need to do. You expect that, and you assume obviously that because they're there, that they've been well educated, that they know their stuff, so to speak. You know, so competence in our business basically is that you have the knowledge to be able to deliver on what you're saying. You understand their situation, whether it be tax issues, whether it be whatever, family issues, whatever. If you're going to make recommendations, you have the knowledge background in order to make those particular recommendations. So, for example, under competence, as you'll see when you start your career, as you'll see, you're going to have to get continuing education credits. For example, in Ontario, you have to have essentially 30 hours of continuing education credits over a period of 2 years. So the idea really is to keep up with the knowledge base and everything else. And basically, don't be something that you're not. In other words, don't promote yourself as something that you really don't know. If you don't know, fine, say so, you don't know. But the client has every right to expect that since you're sitting there, you have the knowledge base, you have the competency to conduct the business accordingly. And that's what we refer to basically the overall, these three really fall under a big heading, which we call acting in good faith. So you would want, obviously, to whoever's giving you advice to act in good faith, you in turn have to act in good faith. Basically, so it falls into these three particular areas. Okay. The next one is the conflict of interest, and the definition of conflict of interest is really quite simple. It's placing your interest above those of your client. In other words, you come first. In our industry, you do not come first. The client always comes first, okay? So your customer comes first. So in a conflict of interest, basically, you put yourself in a conflict, basically, is when you place your own interest above those of others. And that's where we're saying here, for example, if you are selling a particular product, because this product will get you a trip to wherever, essentially, and you need to let the client know, at least to let them know that, Mr. Client, I'm giving you I'm recommending this particular company product or insurance company, whatever it is, but you should be aware that attached to this is a trip to wherever, okay? And that way, at the very least, the client is aware, and therefore they will give you that approval, whatever the case may be. But you can find yourself in a conflict of interest in all sorts of different ways. So, for example, you may be asked at some point in your life to become a power of attorney, let's say, for their wealth and health. You may be asked to be a trustee, where you benefit also from being a trustee. You can't do that kind of stuff because you find yourself in a conflict, basically. So a conflict of interest is when you're actually placing your interests above those of your client, then you've got a problem. So the reality is your client is first, you technically are second, you might say, in some cases even third, but it's basically saying is be aware of the fact that you could find yourself in some kind of a conflict. And if you do find yourself in that conflict, or potentially in conflict of interest, it is, again, your duty of care, acting in good faith, it is your responsibility to at least let your client know that you might find yourself in that particular situation, so at least they're aware of what's going on. Product suitability, a very, very big one. With the proliferation of products today, where the client can pick products, an enormous amount of choices that the client has today, okay, product suitability becomes an increasingly difficult issue, okay? And so here, product suitability basically is making sure that the product that you're recommending fits the particular need that the client has. So in a way, it goes back to conflict of interest as well. In other words, sell the client what in fact they actually need, not what you think they need or what is in your best interest because there's a contest or something or whatever it is. So if the client needs critical illness, then sell them critical illness, not sell, doesn't need disability insurance, whatever. If they need life insurance, but you want to, because there's a contest, let's say, for disability insurance, you keep on pushing the disability. That again gets you back here. So you can see the conflict of interest, how easy it is for you to be caught up in all this. So the product suitability basically is, in essence, is you've done a complete analysis of your client's needs and everything else, and you're making certain recommendations that fit that particular situation. So it is, does it fit the client's needs, or does it fit your needs? Going back to that conflict again. So product suitability, very, very important aspect of it. Tied selling, this is an easy one. This is basically saying is you cannot make the sale of one financial product conditional on you buying another financial product. So, for example, let's say you were in the property and casualty industry, and you could say, I'll sell you car insurance if you buy life insurance from me. That is tied selling. The products have to stand on their own. So you cannot make the sale of one product basic condition on selling another financial product. The products need to stand on their own. There are no conditions attached to actually buying that particular product. The next one is commission splitting. This is more common than you think. There's absolutely nothing wrong with commission splitting, provided that, and let's assume in our example there's only two agents, so it's you and I, and basically we have a joint client, you might say a client of ours, and we split the commission. But you have a license and I have a license, okay? So as long as you're splitting commission between two or more individuals who are in fact essentially joined together, you might say, because they have a common need and everything, but both parties are licensed, nothing wrong with that. The problem comes into play when you give me, let's say, a lead. I go out and I sell that particular lead because I've got a license. You don't have a license, and at that point, then I basically say, okay, 50-50 split. So I cut you a check. The industry frowns on these kind of things because you don't have a license to do that. Companies be more than happy to split the case right down the line, or however you want to do it, right on the application itself. So what you'll see on the back of the application where the signatures are, you'll see agent 1, agent 2, for example. that's perfectly fine because they're both agents. They both have a license. Not a problem. There's been no laws broken. But if it's only you, because the other party does not have a license and therefore can split the commission, and then you in turn write a check to that individual, now you've got a problem. Okay, so now you're getting into commission splitting, and that part is in fact illegal. And of course that leads to this one here, what we call referral fees. You say, well, what about referrals? There's nothing wrong with the referral fee, provided then, again, it is within limits. Usually what happens, as you know, there are companies out there, for example, where they will do data mining and then they will sell these names to you for a particular fee. But those organizations are not in the insurance business, okay? Because if they were in the insurance business, then that creates a bit of a problem. But so if they're simply organizations that simply provide you with leads and you pay for those particular leads, again within reason, usually $25, $50, but usually no more than $50. Nothing wrong with that at all. Again, provided that whoever giving you all of this, they themselves are not actually in the business itself. So they are in the business of giving you a referral. So now you bought that list and everything, and you pay them a particular fee. Also, that fee cannot be conditional on actually making a sale. So that again is an issue. So it is basically, here's the list. Good luck. Basically, that's fine. But if it's say, okay, here's the list, and every time you make a sale, then we want this much money, then you get back up to here again, commission splitting, which cannot be done. Okay, so it has to be a situation where the fee is essentially given to you basically for no conditions attached. Here's a list, here's a name, and so on and so forth. And that's it. And here's a token of my appreciation, that kind of stuff there. But that's it. So you've got to be very careful when between these two, because there's sometimes a very, very fine line. And that brings to the number 9 here, which is falls into the same category basically, and that is what we call rebate. And when you're doing a rebate, basically what you're doing is you're inducing the client to buy a product on the basis that they will share in the commission. In other words, you're going to pay back a certain portion of the premium. Life insurance, disability insurance, critical illness insurance, it's not free. And so therefore, you cannot turn around and say, first 6 months are on me or something because we have a big special or something. The insurance company has a big sale on, so therefore the first 6 months are on the company or on me or whatever. That is a clear violation of the law because you are in fact selling a product. You're deceiving the client in the understanding that if they buy this particular product, they will have a reward right now. So you are really selling a product under a sort of deceitful nature. So rebating of commissions based on premium, you might say, okay, first 3 months, first 4 months, whatever that case may be, okay, that is clearly in violation because the client is not buying it under basically a clear understanding that this is a product that you have to pay for it. They are buying it under the basis that, yes, the product is there and all that, but you're going to have an immediate reward by the fact that I'm going to give you back the next 6 months premium or the next year premium, whatever the case may be. So be very careful when you're doing these kind of these things because it could get you into losing your license or getting a fine, things of that nature there. So you can see that these 3 here can very quickly, very easily get you back up here into some kind of a conflict and everything. So you've got to be very careful when you are dealing in these areas because there is a very much of a fine line. And so we go back to this point here, and that is that at all times, when you're dealing with your clients, you must be acting always in good faith. Always put your clients first and making sure that they are in fact getting exactly what they need. Free of any conflicts, free of any kind of inducements, things of that nature. Now, in professional practice 2.0, I will be continuing on in this thing. So for now, let's leave it there.